How often are you looking back at investments and things going, man, I wish I took that opportunity or that chance to invest in this project or this product or this stock or this crypto back in the day when it was so cheap, and looking at all your friends around you who did take those opportunities back then, and the price now, or not necessarily now, but they made a significant amount of money or returns over the time because they did take that opportunity, and now they're sitting in a much better financial position compared to yourself. Now, don't worry, you're not alone. I've done this multiple times with myself, even recently, and I'm telling you now, it's probably a really good opportunity to actually start taking some risk in certain markets. Now, this is not financial advice, just a way to kind of start thinking about the markets itself. Welcome back to the channel with myself, David, Millionaire Incorporated, where I like to talk about topics of personal finance, investment, and business. And today's no exception. Today's video, I'm going to chat to you about why it could potentially be a good opportunity to start taking take advantage of some of the downtime in this market to actually start looking at investing. Now, the only reason why I'm saying this is because, especially in the crypto market where I tend to spend a lot more of my time and investment and money, the market is down quite a fair bit, which, as you might know, it gives good opportunity for making a decent amount of gains where you can actually 5, 10, 20x your money. Not saying that that's going to happen, but there's a potential for it at a much lower risk to loss compared to when investing at the peak of the market when the risk of gain is significantly less. Now, as I said just before, this is not financial advice. This is just something that I look at, or way I approach my investments to maximize the gains, to give myself the greatest financial reward over time. So, one thing you can actually start doing is dollar cost averaging. And the reason why I'm using crypto as an example is from its highs about 6-7 months ago, in the end of the last year or start of this year, I'm not exactly sure of exact dates, it's dropped almost 60% for Bitcoin, 75% in Ethereum, and even more significantly on the other altcoins, which, if you're going to start putting money into that, for example for Ethereum, if you put $1,000 into Ethereum and bought just under one Ethereum, if it was to reach its all-time high again, you're looking at almost 4xing your money, if not a little bit more, which is a much better return on investment compared to as if you bought when it was at its top at around $4,500, when everyone was predicting it was going to go to 10. It's only like a 2 times multiplier. So that's why I'm saying now, times like this, when things are low, are down, things are bleak, as long as you're investing in good projects or stocks or properties and things like that, and you can financially ride the wave of a downturn, you can set yourself up financially in a significant way using what we call dollar cost averaging. Now, I'm sure you've probably heard that term thrown around a fair bit, but it is probably one of the better ways of actually investing, especially since you can't pick the bottoms or predict the bottoms of markets, and it allows you to kind of have a bit more of an even entry point or price point of entry without missing the bottom or missing the run up. Now, when you're doing that, you want to make sure that you're not just dumping all your money in, or that you're using money that you're going to need for rent and things like that down the line. It's just money that you have set aside for your investments, and so you can take advantage of these downtimes. But if you don't actually want to start investing immediately and you're still kind of on the edge and you want to see a bit more of a clearer sign of a better entry point into the markets, now is probably the best time to actually start educating and researching the market, like products or stocks, projects such as in crypto, like say Ethereum, Tether, not necessarily Tether, but Binance, Polygon, things like that, understanding what makes them work and why they might be used down the line, so that when you go to put your money into the stocks or crypto or whatever you're going to invest in, you're setting yourself up in a way that you have a better chance of success over time. Now, same thing, that's something which I'm doing. I'm spending a bit of time on the side researching new crypto projects or coins or whatever you want to call them, so that as the market starts coming up again, I am going to take advantage of that run up as well. And one thing to remember as well with the crypto market, the one project coin which moves first and foremost is Bitcoin. It's obviously got the largest market cap, the largest name, and people are most familiar with it. Second would be Ethereum. So those two coins are going to be the ones which will move the market first. So when you start seeing them move, then it might be, if you feel more comfortable, might be a time to start actually putting your money into those kind of coins and markets itself. So I hope this video has been a little bit educational for you guys. Don't forget, drop me a like, leave me a comment, let me know what you think, what your thoughts are on this kind of approach. And don't forget to guys, subscribe to the channel, and I'll catch you guys again in the next video. Cheers.